Good morning, guys. I hope everyone's having a wonderful weekend. I'm going to be taking you guys today through TPO charts, time price opportunity charts, if you don't know what they are. And ultimately, we're going to be looking at how we trade with TPO charts using the histogram. Now, I like the letters, right? So I like to see the TPO prints, but there are traders who are quite comfortable using the histogram. I either just want to see basically where the volume is concentrated the most, or where the TPOs are concentrated the most in the form of a histogram. There is absolutely nothing wrong with that. I prefer the TPOs, and I don't. I find the candlesticks can ultimately confuse you. So let's look at a basic strategy when we're dealing with histograms or trading TPO charts. Now we always reference the previous day's value area, which is this here. So this shaded area and this long bar represents the previous day. And likewise, we will be trading in this day, which was relatively balanced. Okay, we can even see that from the candlestick where this was a fairly ranging day. Now, usually, if you had if you had the TPO prints here, what you'll have is letters, and you wouldn't see all this action. The action will be quite clearer. So what would have happened in this day? We would have seen TPOs go like this. So they form like an island, basically. Right, so rather than looking at the price action this way, which looks a bit rangy and sidewaysy, believe it or not, we would have found a trading opportunity that would have made money on that day using this mess. Right, literally, this is a mess, but we would have been able to utilize that. So what I'm going to do is I'm going to backtrack. This is a chart of gold. I'm going to backtrack into a 30-minute session, which is where we use the TPOs on, because they're based on 30-minute sessions. You can utilize them across any time frame. You just have to know what the reference bar is. So, what does this denote? In the case of the daily, I think it denotes a month, right? So we'll be looking at, i.e., a month worth of price action using the histogram. So now that we're into 30 minutes, we're actually looking at a day. So this is actually what the day frame actually looks like. So I'm going to zoom out a little bit so we can actually see what's going on. So again, when using these guys, I'm a bit too far out. When using these guys, normally there will be a TPO chart here, right, which will denote the time price opportunities, which is fine. I can actually add them in. So so let's do that. Let's add them in. Where are we? Should be up at the top somewhere. So we want to show the. So we want to add that in. We just click OK, and bam, we're done. Right, so we have it in. So this is for gold. Okay, so that's it. So we can now see them on the side of the screen. So not to worry. Now what we're going to do is we're going to analyze this against the previous day. So we can see that obviously this was the price action for gold at this specific point in time. Now if we were trading this, now when using candlesticks, a good idea is to trade value. Okay, so the market in this point in time was trading within value. So the moment we started to approach these lows, we should start to consider long positions. Now if we were to come back at any point in time during this day, as we came into this low, to trade back up again within value, then there's a very good chance we'll continue to trade upwards. Now because we had a very thin value area, there's a very good chance for an extension if we weren't resisted at the value area high. So if we think about this, as we traded lower, we would have been able to see where the volume or the TPOs were most concentrated. And as if we look at yesterday's reference, we can see that there was a huge concentration of TPOs here. And as a result, the market came down and did find a lot of support despite blasting through it. But at this point in time, I wouldn't have been able to see this spike. What I would have seen on the actual letter print is something completely different. Right? What I would have seen possibly is a single TPO print, right? Or I would have seen this is an earlier print when the price action was developing. So it would have given me a heads up against most other traders that this market was about to jump long, okay? Because at this point in time, it was trading considerably out of value, and this is what we call a rejection, right? So the market essentially was rejected, right? So just so you guys get this point, and at this point in time, I would have seen an opportunity to execute a long position whilst the price action was taking place, right? So there would have been a good chance that as we traded back into yesterday's value, my long would have come here. Most other traders would have had to wait for a close if you're looking at a candlestick. Now this can present some problems. However, you can still utilize it this way. So again, you would have seen the market roll lower, and as we approached these sort of zones, we would have expected that we would have seen some problems. and as we hit the bottom, we would have seen the actions on the candle signifying there was some kind of rejection, and then as we retreated back into the value area, we would have identified that this market has a 70% probability of trading the entire value range. So it would have been a good long at this point in time, right? Our stops, of course, with the TPO prints, you wouldn't have had that problem, which is on another video, by the way, so just scour the YouTube for it. But a good idea was our stops would have gone at the bottom for where the rejection took place, right here, from the previous state. So we would have been here somewhere, right? So again, we would not have, it wouldn't have been necessary to kind of have very wide stops. We would have still been able to comfortably risk manage. And as you can see, the market continued to trade higher and higher and higher, eventually traded above the previous stage range. Right, so this would have been a perfect, and then eventually it turned over. There would have been a counter trade opportunity if we didn't take profits at the top of the value range, which is why I would have got out around about here. You could have probably ridden it all the way to the point of control. Not really interested in that. The market rolled back, and as we came back to trade into the value area here, there was a very good chance we were going to trade it back down again. Okay, so there would have been two opportunities to trade here, despite the price action was a bit so rangy. Now this is the benefit of actually using time price opportunity charts. Right, so again, this is just using the histogram. Okay, obviously, again, I showed in another video on cable the actual letters. I'll give you a bit of a glimpse now, which are these. Obviously, as you can see, the picture is quite different, and as you can see, we can see our single print here. But how different does that look from obviously what you're seeing here at the moment? So there would have been a lot more clarity on this specific chart, as we obviously, again, there would have been a lot more clarity in relation to this. And if I were to change this on this chart to the letters, you'll be able to clearly see what was going on in the price action in terms of TPOs. So again, it's a good way, because as the print starts to go up, you'll be able to see the ticker on the side, and then that would have given you a better representation of where to get a good trade location. So TPOs are good, they're useful, and obviously futures traders are hugely successful or relatively successful because they utilize a lot of this kind of trading methods rather than, you know, the standard indicator stuff, which in my opinion just genuinely does not work. But guys, that was another introduction to TPOs using the histogram. So again, if you guys are not familiar with TPOs, I suggest that you have a bit of a read up on them. Again, it's hugely important, and it makes a huge difference to your trading. Again, we can also see the volume at a price, which is hugely important. So again, at each price level, we can generally see the volume traded at each price, which gives you an idea of where support is, where resistance is. And obviously this was the punch of control for the day, so within this zone here, and that's what's labeled here. So you can actually see this area would have naturally formed some kind of holding point, but obviously in this case, price traded quite freely, suggesting that both buyers and sellers were active in this market. Well guys, yeah, hope you enjoyed the video, giving you an idea of TPO charts. If you've got any questions, feel free to email me, Skype me, or chase me around on YouTube. Perfectly fine. I look forward to seeing you guys in my live trading room. I also look forward to seeing you guys check out some of the webinar content we put out. Just join us. It's completely free, and see what it is we do. And we like to work with new traders. It's always great. There are a lot of experience between us guys in the room, so it'd be good to see you. Right, have a wonderful morning, guys, and see you all at the Traders Club.